All right. Good evening. I'm James Roney, the founder of First Choice College, and we've been working with students and families, getting them prepared for all aspects of the college search, primarily now for the test prep, but we've been doing this since 1999. So for over 20 years, we've been working with families. Tonight, we're going to go through the Understanding Financial Aid seminar, and we're focused on need-based aid. If you have any questions, you can ask at any time. Feel free to unmute yourself or just type something in the chat and then I will answer the question. So, and this seminar is being recorded. So the first thing, what we're focused on tonight is need-based aid. What is need-based aid? So need-based aid is determined by your EFC. EFC is expected family contribution. And one of the things, there's the alphabet soup of college financial aid. You're going to hear all the different acronyms: EFC, SAR, Student Aid Report, FAFSA. FAFSA is free application for federal student aid. So all financial aid basically starts by filing your FAFSA. The important part is free in there. There's no charge to file that, but there used to be a site, FAFSA.com, as opposed to the FAFSA.ed.gov, that would charge people to submit their information and then forward it on to the FAFSA. It did some checking for you, but again, the FAFSA is free. The profile, unlike the FAFSA, does cost money, and that's done by the College Board, and we'll get into the differences between the federal methodology, the institutional methodology, but the CSS profile gets more in depth. It asks more questions about your finances. It's used by private schools to determine your institutional expected family contribution, and it does cost money to file. So as I like to say, you get to pay to find out how poor you are. So again, need-based aid is determined by your expected family contribution. You submit your FAFSA or the profile, and then with the FAFSA, it goes to a central processor, and they come up with that number, your EFC, which is then sent to all of the schools. So that's the amount of money the government says you can afford to pay. And need is the difference between the COA, cost of attendance. It's often actually referred to as COE, cost of education. So need is the difference between the cost of the education and what they expect you to be able to pay. And so let's say it's $75,000 a year at a school. And the cost of education should include total cost of education for federal formula for need-based aid can include tuition and fees, room and board, books, personal expenses, and a travel allotment. All of those things go into making your total cost of education. And so let's say your EFC is $25,000, the cost of education is $75,000. So your need is the difference. $50,000 would be your need at that school. So your EFC is determined by four parts: parent income, parent assets, student income, and student assets. The main driver of your expected family contribution for most people is parent income. And that's one thing that I would say is, when you look at, well, we'll talk more about your EFC, but there's one formula for the whole country. And so there's only small allowances for the cost of living in different parts of the country. And so what may not seem a lot on the East Coast may go a lot further in North Dakota or Wyoming. So parent income is the main piece. And so the parent income is roughly 50% of your income above certain allowances. And the allowances they give you against income are an income protection allowance, which is based on the number of people in your family. They basically protect the federal poverty level for you to live on. Your federal taxes paid that you enter, your state taxes paid, which are calculated, and your Social Security paid, which is also calculated, and we'll talk about that later on, and then an employment expense allowance. Parent assets are assessed at roughly 5.6% above an asset protection allowance. And it used to be that the asset protection allowance was roughly $1,000 per year per the age of the older parent. And so if the older parent was 45, they would only look at your assets above $45,000. And while college hasn't gotten easier to pay, the asset protection allowance has gone down. So now it's only about $10,000 they protect. So they take 5.6% of your assets above. And again, it varies based on the age of the older parent, but above that $10,000. Student income, and it's student income, 50% of student income above $6,000, it's like $6,300. And then it's 20% of student assets from the first dollar. So a lot of times people ask, what are assets? So for an asset is anything that is not in a retirement account. And so they don't look at the values of your IRA, 401k, SEP, or KEO. Also, if you have an annuity or cash value of whole life, they do not consider those assets. But one thing that is important to know is that they do, if you are making a contribution to your 401k, they add that back into your income. So while they don't look at the value of your 401k, your retirement plans, they do add back any contribution made in that base year that they're using to calculate. So do they consider home equity? For federal methodology, no. They don't consider your primary residence. If you had a vacation home, though, they would consider that. Or if you had other investment real estate, they would consider that. Private schools do ask about the home you live in, and they'll ask when you purchased it, purchase price, and they, what you owe on it. So they do, some of them do consider your home equity, and they will consider it in different ways. So what I wanted to do is just go through some generic, some examples to give you an idea of what an EFC would come out to be. And so we're going to start with, this family, we'll say 4 family members, 1 student in college. So if you have 2 students in college at the same time, they give you a number in college adjustment. So it's basically like they figure the parents have a certain amount of money they can spend, and then they share it among, equally among the children who are in college. So my brother's on, he's a year younger than me. He and I were in college, 3 years for the same. He always had at least 2 because our sister is a year younger. So for 2 years, there were 3 of us in college. So again, they give that number in college adjustment. They look at the number of parents in the household, number of parents working, and that's, to figure out the employment expense allowance, business, commercial, farm net worth. So if you own a business and it's your primary source of income, they exclude the whole value of it as long as you have less than 100 employees. And so with this example, in one thing on the FAFSA you'll see is they ask for parent income from work, and then they ask for your adjusted gross income. So your EFC is calculated off of your adjusted gross income. That Social Security allowance is calculated off of the parent income from work. And so here we have a family with a gross income of $250,000. Estimate, we'll guess, taxes paid $50,000. The student was up at that limit, the 6420. And so here, we didn't show any assets. So from a $250,000 income, it's about a $54,000 in EFC. So that'll give you an idea from there. Now the next example, we said, and in here we said with the $150,000 of adjusted gross income, and again that same like a 20% tax, so we'll say $30,000 in federal taxes paid, and that EFC is $23,000. So if you're making more than say $170,000, you wouldn't have any need at UConn. So the next example is if we had assets. So this is the family with the $150,000 a year income, and we said 150,000 in assets. So you see that adds about $8,000 to your EFC. And this is the EFC calculator I'm using. I actually put it together every year in end of May or June. They release, the Congressional Quarterly updates all of the tables. And so this is on the current year. I haven't updated it yet for the 2020-2021 year to figure out the EFC. So, but this is based off of the 2019-2020 year. And then the next example, again, we just took 100,000 in assets out. So you can see, again, 100,000 in assets, 5.6%, lowered the EFC by $5,600.
James, in terms of parent assets, how are 529s treated, and what happens if you have more than one child and you have separate 529s?
Yeah, and so 529s are counted, and it depends. So the answer for everything in college is it depends, right? So for federal methodology, 529 that is in the parent's name is considered a parent asset, and that would be for all. So they would look at the parent asset for all of your children, right? But that means that it's considered at 5.6% versus 20%, right? If it was just straight in the student's name. Some of the colleges, the private colleges for institutional methodology, they will ask, is the child a beneficiary of any college savings plan? And so what happens is for federal methodology, if you have the 529 in the grandparent's name, it excludes the formula. It is not taken by the formula at all. And that's why the profile asks the question a little differently, if the benefit of any college savings plan. And then they would look at a 529 in the grandparent's name. And then they tend to, for the institutional methodology, consider 529 plans as student assets. Now, again, if you're applying to like the top schools, they have a different formula. So Yale, Harvard, Stanford, Princeton, and actually most of the Ivy Leagues have matched them. For Yale, it's roughly 10% of your AGI plus 3% of your assets. That's the formula they use. Up to a certain level, then above a certain level, they use the standard formula. But again, so if you're making less than 300,000, say, well, less than 270,000, Yale is really going to be around the same or cheaper than UConn, if you get in. But all of the colleges have different formulas in terms of, well, there's the one formula for the federal methodology, but the private schools can do different questions. And that the way you would know if they have a different formula is if they require the CSS profile. That's when they may have an institutional methodology. And then they can ask institution-specific questions. So some colleges have asked, like, how many cars do you own? How much do you owe on the cars? Which car is the student's car? Some have can ask, what is the fire insurance value of your home? And some do ask, do you own any annuities or do you have any cash value of whole life? For the majority of colleges, like cash value of whole life and value of annuities are excluded, but not for 100%. There are a handful that do ask that. So this kind of goes, we got a little ahead. So what are assets, cash, savings, checking? And so there, the asset questions are cash, saving, and checking, investments. So investments would be stocks, bonds, mutual funds, investment real estate, anything that is not in a retirement fund, right? Anything basically that doesn't have a penalty to get at. And the 529 plans are considered parent assets if they're owned by the parents. Now, if you have a business again, if it's less than 100 employees and it's your primary source of income, the value of that is excluded. So if you own your business 100%, you may want to keep more cash in your business than in your personal checking account, because then it's excluded from the formula. The other thing is, even if they are considering the value of a business, they do shield a higher percentage of it than they shield for your regular assets. So if you have investment real estate, it may make sense to have that in an LLC, but that's something you would really need to talk. And with anything you do, I always advise people to talk to your financial planner and your accountant, because not all schools guarantee to meet your need. And so just because you're eligible for more money doesn't mean that you're going to get more money from the colleges. But if you do sell an asset or shift it around, you are guaranteed to pay a commission or some sort of a fee on that. So you also want to look holistically and look in in terms of your retirement and beyond that. So not necessarily just focus everything on the college. So what are not assets? Primary residence, IRA, SEP, 401k, annuity, cash value of whole life. And again, sometimes the CSS profile will ask questions about those, and some schools may include them. Usually what they're doing, though, with the profile, even though they go more in depth, is they're looking for a snapshot of your overall wealth, and that if it looks like you have a decent amount of money saved for retirement, then they may take a little more of your current assets, or shield a little less of your current assets. The profile also does where they, based on the number of kids, they'll shield more of your assets, figuring you're going to be paying more for education, for your other children. And again, what I was starting to say before too about having investment real estate in an LLC, you would want to do that if that made sense for you from liability protection and just overall for your taxes, not just because colleges, it may give you save a little bit. And again, it may lower your EFC a little bit, but again, you want to look at everything holistically. So the assets that are assessed, again, it's 5.6% of parents' assets above that APA asset protection allowance. Students' assets are assessed at 20%. They have no asset protection allowance. Institutional methodology, I think it's 25% for students. So they figure a quarter of their money is used each year. Assets in a business are given a higher protection limits. And before you were to shift assets or move anything, one thing I'd say is just look at how much of your EFC is coming from income. And especially if you don't own your own business, there's not a lot that you can do to change your income. So if your income puts you out of consideration, then you don't want to make any of those changes. So again, everything starts with filing your FAFSA. The FAFSA used to be, I'd say, more complicated to file, and the reason was you were filing it with the year. So let's say if your student's graduating in 2021, it used to be the 2020 taxes, but you had to file starting on January 1. And so you were filing without your tax returns being done. So you had to estimate all the information and then go back and correct it. Now they use what's called prior year. So for the class of 2021, they're using your 2019 1040 and W-2s. And you can file as of October 1st of the student's senior year. I recommend you file as in October. And since it's with a completed tax return, the FAFSA is really pretty straightforward and you can get it done pretty quickly. The CSS profile does take a little bit more time. In order to file it, you're going to need the parent tax return and W-2s, student, if they filed taxes, their tax return, if they worked, their W-2s, parent and student social security numbers, parent and student dates of birth, parent and student email addresses. I usually, when I do file forms for people, I usually don't put in the student email addresses because I find that students aren't as good at checking email as parents are. And so I will usually put in the parent email address for both, or it could be, one parent for the parent email address and the other parent for the student email address, just in case any important information goes to the student. You don't want to miss that. List of colleges where the student is applying to school. You can only send the FAFSA to 10 colleges at a time, but if the student is applying to more than 10 colleges, what you have to do is you wait until it's processed, which if you sign it online, it's about 2 days, and then you go in and do a FAFSA correction and just release it to the additional schools. So you would delete the first 10 and add in new schools. It used to be the order you listed colleges on your FAFSA mattered. Now the colleges don't see the order anymore. So that's a good thing. So you don't have to worry about what order you're listing the colleges on the FAFSA. So one less thing to worry about in the process. We all know there's enough to worry about. The other thing you need is the FSA ID, which becomes your online signature. So if you have more than one child, the parent's FSA ID is their signature for all of those children, and the student is the student's. And so, and that would be their online signature if, for all 4 years, and let's hope they keep it to just 4 years, as well as grad school. And then you'll need a summary of your asset information as well. So now the income, we said it's the prior year, but the asset information is a snapshot as of the day you apply. Now, one thing to consider is, and it's, if you have students who are class of 2021, your 2019 tax return is already done, and that's the base year they're going to use. But, if you're thinking ahead of time, sometimes you may want to think about managing capital gains because, if you were to sell a stock or move an asset and you had a capital gain, that shows up in your income. And remember, it's 47% of your income. So it would be a higher percentage. So you would want to make sure, if you could, you didn't have any gains showing, or unnecessary capital gains showing in that base year.
If you do have non-recurring income that shows up in that year, so that's not indicative of what you're going to make going forward, is there a way to include a note, or do you have to write a letter to the school, or how do you deal with that?
Yeah, and so that is, and so pretty much what we're going to see for everyone is that your 2020 income is going to, well, not for everyone, but for the majority, a lot of people, 2020 income year is going to be very different than the 2019 income year. And it, again, a lot of things remain to be seen. It may be very different going forward. And so what you would have to do is file what they call an extenuating circumstance appeal. And so some colleges like UConn has a form for filing an extenuating circumstance appeal. So you would have to send a letter to the schools. Schools have the ability to exercise professional judgment and make a change, on their own to your EFC. But again, that would be a case by case, and you would want to send a letter to the schools. And one of the things is, the best time really to make those types of appeals is while you're applying to college the first time, because the colleges are competing for students then. And so you want to make sure students are applying to colleges in similar pairs, meaning, if students applying to Yale and they get a full scholarship to Southern, Yale does not feel a need to match that, right? But if Harvard gave the student more money than Yale, then Yale, and colleges say they don't negotiate, but if you send them, and that's when I would usually, you write a letter, you would let them know of any extenuating circumstances. So those could be a drastic change in income. It could be you have braces for younger children. You could have children who have other costs for their education for some reason. You could have high unreimbursed medical expenses. You could have, a higher cost of employment. And so, you know, when we were in college, Dad wrote a letter to Yale because he worked in Boston. We lived in Milford, right? And so they were able to give him, it cost more for him to work than for someone who, you know, commuted much less than that. So there are a number of different reasons, but usually what you would do is write a letter, and I like to have it come from the student saying, you know, I would, this is my first choice college. I would really like to go here, but unfortunately, you know, for the additional 10,000 a year versus, you know, another college, I can't justify the additional expense on my parents. Were you able to consider when you crafted my award and put in a couple factors? I would appreciate if you could, you know, reconsider the award. And usually they'll come back with some additional money, and they're not going to pull away your money, right? So the worst case is they say no, and you're in the same boat. So it is worth it to go back, but it isn't like a hardcore negotiating with that, because again, most schools like to say they don't negotiate, but they will consider extenuating circumstances. Now, the FSA ID, this is something you can apply for ahead of time, fsaid.ed.gov. And again, that becomes your online signature. And it's better than when it was the PIN number. It's a little easier to get a new one. It's usually your email address, and then if you forget the password, it's easy. It's pretty easy to reset now. So again, when the FAFSA, they have some additional questions that they ask, and so there are some things that will help you, right? In that if you paid child support, then they would give you a credit against your income for that. You know, they're not going to penalize you for tax credits, and this is, you have to reapply every year. So if the student is getting those tax credit, or you're getting the tax credits for paying the student's tuition, then they're not going to penalize you, you know, count that against you since you had a lesser tax burden from that. Work study doesn't count. If there is any grant or scholarship aid reported to the IRS, that doesn't count. But there are some things that, some untaxed income that does get added back into your income. And so the payments you make to your 401k or IRAs, they add that back in as if it was discretionary that year. If you receive child support, you're supposed to include that, and that gets added in. Untaxed portions of IRA distributions, tax exempt interest income. If you're, and I did actually, I had a clergy member who I had helped, who we had to include his parsonage here. So the housing allowance, veterans non-education benefits, and then the catch-all other untaxed income not reported gets added back into your income. And so the one thing, you know, I told you before that on the FAFSA, when you file, they ask for mother's income from work and father's income from work. And that is used to calculate your Social Security allowance. And so one thing I'll tell you is it should not be your box 1 information from your W-2. It should be your box 5 income, even though they make it very unclear on the form. They make it seem as if you're supposed to include your box 1. But the reason is you pay Social Security tax on your 401k, right? On your, even though you don't pay income tax on that. So if you're not including that extra amount, you're not getting that allowance. So in essence, you know, if you had 10,000 withheld for your 401k, if you put in box 1 versus box 5, you would have raised your EFC by $367, which, you know, in the grand scheme of college isn't a lot, but I like to tell people it makes it worth it to listen to me for an hour if you can save $367. Well, at least I hope it does. So we went through this a little bit, but, you know, the potential questions. My income's changed significantly. What do I do? So talking about those extenuating circumstance appeals, if you have high unreimbursed medical expenses, if the income has changed, like someone may have lost a job, or you got a bonus one year that it doesn't come back again, or whatever the case is for your income. If the student's parents are divorced or separated, who files? That should be the custodial parent, and the custodial parent is defined as where the student lives 50% of the time plus one, right? So where the student lives more than half the time. It doesn't matter who gets the income tax deduction, as often, in the case of divorced families, that varies, it alternates by year. So it's where the student lives more than half the time. Now, the FAFSA is the custodial parent and the custodial parent's spouse if the custodial parent is remarried. However, sometimes for the profile, they would still ask the non-custodial parent to file. And if the non-custodial parent is remarried, it would be the non-custodial parent plus the non-custodial parent's spouse. And then if your child applied to more than 10 schools, then you can only release the FAFSA to 10 at a time. So as I said before, you would just have to go in and file an update and release it to the additional schools. If the family is not, so let's say you go and you calculate your EFC and you're not eligible for aid, should you still file the FAFSA? I would say yes, and there are a few reasons. One, to get, and it's no longer the Stafford loan, but that's what it was when I went. It's now the William D. Ford Direct student loan. But if you want to get that government loan, which is $3,500 a year in the freshman year, $4,500 in the sophomore, and then $5,500 in the junior and senior years, then you need to file the FAFSA to get that loan. There are a lot of different forgiveness programs for that loan, so I do recommend people take that loan. It can be subsidized, which means the government pays the interest while the student's in school and for the first 6 months after they graduate, or unsubsidized, which means interest starts accruing right away. But either way, there are a lot of forgiveness programs. The Teach Grant, which is a grant if you're going to go teach in a high need area. And so you would have to file your FAFSA for that. And if you don't end up becoming a teacher or fulfilling the requirements of teaching in a high need area, that reverts to an unsubsidized Stafford loan. And then there are some schools that require it to be considered for merit scholarships, which again isn't really completely merit if you're requiring them to file the FAFSA, but I have seen in some of the schools where they do require you to file the FAFSA for merit scholarships. And I know one consultant who he said he wants people, if you're not eligible, he likes having that filed because, again, some of the schools are need blind for 85%, and then when they're filling that bottom 15% of the class, they're need conscious, and if they see you're not going to need a lot of financial aid to get you to go, it may help you in that bottom, to get into a school. So the other thing I just wanted to touch on briefly is, well, in here actually, before I do that, some resources. So in New England, Connecticut is part of the Regional States Program. Regional States Program has reduced tuition, and so if you wanted to go to a school in Rhode Island, let's say, and it's for a major that they don't have at one of the schools in Connecticut, you pay a reduced tuition, which is not as low as Rhode Island in-state, but it's significantly lower than their out-of-state. And you can see all of the programs that qualify in New England at that website, NEBHE, New England Board of Higher Education.org. And then tuition programs is the item you would select from the menu at the top. collegeexpress.com/lists those lists were put together, many of them at least were put together by Steve Antonoff, who's an educational consultant, former director of admissions at the University of Denver. And he puts together a list of schools that are strong by a major. And so there's the book Ruggs Recommendations, which also does that, but the College Express lists are free and you can go there and look. And so again, the average student is going to change their major 2 times, so you don't necessarily want to go to a school just based on the strength of a major, but it's a good way to help you narrow down schools and finding schools that are strong for a major. College Board has a great college search. The other thing you would use the College Board for is looking at the colleges to see the 25-75 split on their SAT. And so that number, the 25 number, 25% of the accepted students scored below. The 75 number, 75% of the accepted students scored above. So if you're above that 75 number, you're in the range for the merit scholarships. ACT student, that's for registering for the ACT. UConn has and it's late now, but it's April of every year. They have a deadline to apply, and they're not doing it this year. But the UConn Summer Explore Engineering Program, it's a 1-week program. You get to shadow all the different disciplines of engineering. In your student accounts on First Choice College, if you've taken our SAT class or the tutoring, you can do the college search in there. And in the college search, every summer we call about 1,200 different colleges, and we have the merit scholarship information. And so you can go in and look based on the student's SAT, GPA, states where they want to go to school, size of the school, the setting, so urban, suburban, rural, level of competition of the admissions, and come up with a list of colleges where the student's eligible for scholarships, and find out the separate, because oftentimes colleges have different scholarship deadlines than their regular admissions deadlines. So we have those deadlines. There also, you can filter if you only want to find schools where they're eligible for larger scholarships, you can set minimum scholarship amount. So to find that financial safety. And so financial safety isn't always a state school because, nationwide, the average tuition discount now is just about 50%. I think it actually went over 50%. For this year, meaning that on average, you only pay 50% of the sticker price for the private colleges. And so the way they discount that is through these merit scholarships. So we talked about, writing an extenuating circumstance appeal. There is this website now that has a form that helps you for free to create those letters. So it's formswift.com/SwiftStudent. Now, next thing, I just want to talk briefly, and again, if you have questions, please ask them. The impact of COVID on college. So the one thing we're seeing is, the change in colleges that are going test optional. So I think it's 70 colleges so far have announced because of the impact of COVID-19 on canceling the spring ACT and ACT and SAT, that some are for 1 year, or UConn is for 3 years going test optional. Some of those colleges, though, haven't gone test blind, meaning that they will still look at your test for the admissions process, and many of them are still, even if they're test optional, are still using the tests they're still using the test for the merit scholarships. So, in our area, UConn has announced a 3-year program where they're going test optional, and they'll evaluate its impact. The biggest change nationwide has been the University of California system, which has announced they're going test optional for the next 3 years, and they're trying to develop their own admission test. And if they don't end up developing their own admission test, after 5 years, they're going to go test blind. But for out-of-state students, I think they are they're optional. Once they have their own admission test for California students, they're going to have to, they can submit the SAT or ACT in place of that. So, there are changes. There are some colleges who are waiting. So far, there's only one Ivy League who has gone test optional, and that's Cornell. I think it will depend on the ability to have the August SAT test before we would see any others announce, if they were going to go test optional. The one thing, though, I'll say, I know a lot of for the families who have already done the test prep, there's one college admissions officer who I interviewed who at the time had said he didn't believe in going test optional because he said, all of our students were preparing for something else. We're preparing them to go to med school. They're going to have to take a test. To become a doctor, then they'll have to take a test. To become a nurse, they'll have to take a test. To become an engineer or a CPA, they're going to have to take a test. So it still is a good skill to learn how to take tests because, at some point there will be tests that the students will be taking. There will be, I know the SAT and ACT, for the students, it feels very high stakes, but I think that the tests when you get into your career are even more high stakes there. So it is a good skill to have, that test taking. So what does college look like in the fall? And so again, if you have high school juniors who are rising seniors, the way this impacts you is if students decide to take a gap year. And I have talked with some students who, they don't want to, if this college is going to be teaching online, they don't want to pay that same tuition for a private school for online. And, a lot of college is the residential experience at some of the schools. And so they'll be missing that. So, there are really a couple scenarios. So Quinnipiac announced that they are going to be going back on campus next fall. And so they're going to have students come back actually a little earlier. They're going to be testing all of the students. And so for the first, I think it's 2 weeks of class, their classes are going to be online until they've tested everyone. And then they will have actual classes. But their plan is that after November 24th, when the students leave for the Thanksgiving break, they won't come back until the start of the next semester. And with the, the possibility of, a resurgence in cases in November. And that's, been one of the scenarios I've seen. There are some schools, the University of California, have said they are going to be online for the fall. And then some schools, Purdue has said that they will be on campus, and some other colleges have said that they will be back on campus. Of course, what Purdue said is in order to protect the people who are at more risk, which may be the professors because they're older, you may have students on campus, but professors teaching via Zoom to students who are actually in a lecture hall. So again, it's still, even when they are on campus, it may look a little different than it has in the past. There's been talk of shifting the calendar, either starting later or starting earlier to try to finish before that. So there are probably 15 different scenarios, and what they're advising colleges is to pick 3 to prepare for. And there's the likelihood of what they call a toggle semester, where you'd have to switch. Maybe you start on campus, then go online, or start online and then switch to on campus, then maybe have to switch back to online depending on the circumstances. So unfortunately, I would say flexibility is going to be the key, but that means there are students who are going to ask to take a gap year. And, our cousin is going to Tufts, and he will be taking a gap year, and they have said that they will save his slot, so he'll still be able, he won't have to reapply to go in the fall of 2021. But, I was talking with a student who heard from friends that Princeton had sent out a letter to all of the students they accepted and said that if you choose to take a gap year, we will not be saving your spot for the fall of 2021, you will have to reapply. And so that's one thing. Colleges will have different policies for that. I think net things will probably wash out. Unfortunately, what we're seeing, it's still going to be highly competitive at the top schools. The only thing I would say is that people who are going in for this fall may have had a better chance. I'm sure that colleges that never go to wait lists have gone to wait lists this year. So students may have had a better chance of getting in off the wait list if they chose to go for next fall. But by next year, it'll still remain to be seen. But what we're seeing is there's a declining number of high school seniors, and there are less international students coming to study here. And the pandemic is definitely, there will be much less actually international students because of that. So I think, with a lessening number of students, that could offset students who had already been accepted for the gap year. But, with that caveat that it will still be highly competitive at those top schools. At Yale, where there's over 35,000 applicants for 2,100, to accept 2,100 students. So with that, I will open it up. If you have any questions, please ask your questions. If you think of anything afterwards, you can always email me and email or call in to the office. So I should probably switch then to the next screen, which has my email and the office phone number.